What's going on, guys? Nick Dark here. This is going to be another video, full chart breakdown video on AUDJPY this time. So let's get right into it. Right. So first thing we want to do, we're going to do a top-down analysis. We always start out on the monthly time frame whenever we're kind of approaching a new pair, right? So we want to address and identify major areas of support and resistance. So you want to go ahead and clean up your chart, take off all your indicators. I took all the MAs off for now. And then I'm going to switch off from the candlestick chart, which is what you're seeing right now, over to a line chart. And this just helps find the real close of the market, like the real points, rather than, like it eliminates wicks, rather. You're eliminating the wicks by going to the line chart and finding the real price action. Okay, so that's what we're doing here. And we pretty much just want to find areas where we've seen a lot of reaction on both sides of the market. So I'm going to go ahead and plot a few monthly zones, and then kind of take a look at the ranges that are here as well. So let's see right here. This looks like a good zone. Nice little overlap right here. I'm going to call this 88 flat. Okay, text, monthly. I am going to drag it over actually because I want it all the way back here. 88 flat. Okay, and then you could double check this if you go to the candlestick chart. See if it makes sense. Did price action react at this level to some degree? You know, it's okay if it goes over because this is more so, it's a zone. It's an area where we can expect some sort of price action, you know, reaction. So it's okay if it goes over a little bit. If you see some wicks going over, that's fine. This level looks to be pretty strong. We're getting reaction on both sides of the market. Looks pretty good. I like it. I am going to change this, though, over to the right. There we go. All right, cool. So now we got to find one more zone. Back to the line chart. Let's find one more pretty significant zone. I like this zone over here, right about here. And this would be, let's see, 77. Let's do 77. And it's okay if you plot it, take a look, don't like it. You know, it has to, you know, kind of resonate with you. You have to be happy with the level. So let's see if we're going to check it here. This one looks pretty good. Good rejection on both sides of the market for the most part. Let's go ahead and check. I want to see this real quick. Okay, it's about 1,000 pips difference. Okay, cool. I like this zone. Actually, hold on. Let's go back to the line chart for a second. Let me double check this zone down here. See if this is a little better. What is this? 70. Got 70 flat. Might be a little too low. So right now I'm just checking other options because the next step is going to be taking this range. That's too far of a range, right? Too much. Okay. And I'll explain in a second. Let me just find this next zone. Be a little more. Yeah, I think it's going to be 75 flat. I like 75 flat better. We're going to double check again. Back to the candlestick chart. So this is a bit of an overlap here. So like this whole zone has had a lot of reaction. I'm gonna call it 76 because the most it's the level where price action has touched the most, and that's what we want to see. So here it's overlapped a little bit. That's fine. You know, rejected here a little bit as support. Didn't really respect it here. Respected it here as support. Here again as support. Went past a little bit. Again rejected as support. Rejected as resistance here. And now we're coming back through. So that's a pretty good zone now. I'm happy with this one. Let's go ahead and get this range. Price range. Because now we want to find our other zones. Okay, so we're going to do the upper zone first. Right here. Pretty much 100 flat. Good level. And also keep in mind, these psychological levels have a lot of weight to them. You know, there's a lot of, you know, order flow that goes into, you know, whole numbers where you'll see a lot of institutions place a large order or many orders at these psychological levels. So usually these monthly zones. So 100 is clearly a zone where you would see a lot of sell orders. You know, down here towards like 70, you'd have a lot of buy orders and so on and so on. It's just, it also helps because you're thinking of the zone as, like, let's say it was like 80, 88, like super specific. You're looking at 88.784 as like a super crucial level when you shouldn't be thinking of these monthly zones in that way. They should be more so just areas because again, like we talked about, price action does extend past these zones before reversing. It's not going to stop on the pip. It's just bringing your attention to this zone, and you're made aware now because of this zone that there is potential for some sort of reaction, movement, rejection, essentially leading to a trade opportunity. Okay? So now that we have this monthly zone plotted, this top zone, this makes sense. Look, it touched it over here, pretty exact. Here a couple times as well, overlapped. So not a bad zone. Let's now get the lower zone in place, and then we're going to split these. Okay, right about here, 64 flat, very nice. Okay, looks pretty good. Lower time frame, found resistance here at this monthly zone. We also found resistance a bunch of times here as well as support. So this is a good zone as well. So I like where our monthlies are at, looking pretty good. Now it's time to split these zones, meaning you measure the range, and then we want to plot weeklies in between. Okay, right at 70 flat, good zone. Weekly. Cool, this makes sense. Look at this. Just missed it, a bit of a gap there. Actually, if you draw it back, it overlapped. So you have an overlap and a gap. Here, over here, support, resistance again, lower time frame support there. Over here, I found some rejection as well, and then finally pushed through. So that's a good zone. Let's keep doing this. Next zone's right here. Pretty much 82. Weekly. And does this make sense? Yep. Support here, resistance here. Overlap there, but still rejected. So resistance and support. This was just a wide range here, so that didn't really respect it. On the lower time frames it did, but not on, overall. Here again, support, resistance, good level. And then the final level. So notice how I'm always checking my work too. Each step, you just want to be very precise. There's no need to rush it. Just take it nice and slow. So this is actually me rushing it too, making this video. You can take as much time as you want. Just make sure everything is where you like it, because you'll be using these zones for quite a while. Until next time you reanalyze the entire chart, do a full chart breakdown. Okay, so now, right, this is all marked up well. We have good support and resistance. That's all we can do here, other than taking a look at recent price action. So the price action that I'm looking at is this entire section here. So this is what I'm considering recent monthly price action, if you will, because this is the established trend, right? We're bearish here. So this is the bit of structure I want to be looking at. While this trend is intact, we're maintaining this time frame structure, okay, in this time frame trend. So what I want to do from here is just find the most significant zones in this trend, right? So that means this monthly right here. I feel comfortable highlighting this. So what I'm doing now is measuring from the real body close of resistance here, and then the real body support of this broken zone. So I'm just highlighting this zone here, capturing all this price action where we saw rejection on both sides of the market multiple times. This is a very significant zone, so I'm going to highlight it. Okay, let's find one more. That'd probably be this zone down here where price action is currently, and it's actually breaking back up to the upside, erasing this lower high, but it's fine for now. We can also apply some trend lines here if we want. We can see if they apply. Let's go ahead and draw this down. Pretty steep. I think this would be a better weekly trend line. We're going to take a look at that in a second. Either way, guys, you don't live or die by trend lines. They're meant just to kind of highlight a channel and support a trend. In this scenario, it would clearly highlight that this is a bearish trend, and you could just see how the lows approach the areas, the highs approach the areas of the trend line, and so on and so on. But I never really look for entries just based off the trend line. If a trend line breaks or something, it's not an immediate buy. It's zones over trend lines, no doubt, but they are good. They do still have their usage. So we've done what we can here. We could also fib it if you want, just to get a better perspective of structure. This was a conviction candle to the downside. We established a low here, so on and so on. Okay, so that means new structures right here. Conviction candle, pushed lower, all the way down to here, pulling back to the 61.8. So even more confluence in this zone. I would even say, let's go to the weekly now. It's about time to drop. So let's go ahead and see if we can get a little more precise with these zones, as well as these trend lines. So let's go ahead and zoom in a little more. Let's grab this trend line here, bring it up to this. Okay, this looks about right now. Damn near close. So I'm going bearish wick to bearish wick, here to here. Okay, and we're just highlighting the trend here. So that the fact that we're getting rejection off this trend line doesn't mean too much to me, because this zone is right here as well. So I'm favoring this zone over the trend line 100%. But we can go ahead and adjust the zone to real body close right there, to that candle close, this candle close right here. That's our zone. Price action is in between that now. So we could potentially see a rejection or a breakthrough. We'll go over both scenarios as we drop time frames. But let's ask ourselves some other questions while we're here on the weekly. Do we need to adjust any zones, any trend lines? Does it all look good to us? Are we happy with what we've done so far? Let's see. I think so. We've adjusted trend lines, adjusted zones. We're looking pretty good. I think it's time to drop down again to the daily. Okay? Let's go to more current price action. Again, okay, so we're at the key level here. This is that pullback to the monthly. This was all that Corona news. Pretty crazy stuff. All right, so let's see. Let's see where we're at. We have another minor zone right here. I'm gonna highlight this zone right on the weekly. It's a lower time frame zone that it's good to be aware of. Draw it right to there, and right to here. Okay. All right, cool. So clear, super bullish trend, right? Very, very bullish. And actually, we had this. Once price action broke this, it's looking more bullish. 76.5. So what I'm doing here essentially is the overall trend is bearish, right? We know the overall trend is bearish on the daily time frame and higher, but we do have a very strong daily bullish trend, right? So overall, weekly, monthly, bearish, daily is looking super bullish right now. 4 hour daily bullish, especially since we're breaking through these prior highs here. So these prior lower highs and these tested highs. So we got to break above. We need to confirm that this is a true break. We'll see. Again, this is a very, very significant zone here at this monthly. So this will kind of tell us, where, how this reacts is going to tell us where price action is going to go next. Let me just go ahead and draw this pattern in. So what we're doing here is identifying patterns and then trend. So daily trend is now bullish, waiting for that confirmation, but it's definitely looking more bullish than anything else. And then we do have a ascending triangle here, as you guys can see, right? Lots of higher lows, and then a key resistance level right at 76 flat, or actually right a little bit higher, 76.6. That's key resistance. So ascending triangle, kind of squeezing price action, ultimately broke to the upside, found a little bit of a reversal. So let's drop to the 4 hour and see what has to happen for us to enter in a trade. We're going to consider both bullish and bearish scenarios. Okay, so this is our monthly zone. Let's just expand this a little bit more, kind of figure out where we're going to go. All right, so what I want to do first is throw a fib on this because we did break to a new higher high. So I'm going to enter on this conviction candle. This did not form a structure here, did it? On a lower time frame, it did. Did it pull back 38.2? Didn't close there. So I'm actually going to draw it from here, from this higher low to this high. Okay, so now we're at the 61.8. Price action's pulling back. Okay. All right, cool. So what are our rules? We want to wait for structure to form, enter in a 38.2 or 61.8. Let's go ahead and highlight these. If we're considering long positions, that is. So, all right, here we are. So we have two potential long scenarios, although, we have two as of right now. Get rid of that. I'm going to draw in a new zone down here as well because I want to highlight broken structure down here, which is near the 88.6. Let's draw this back in blue. Okay, cool. Then I'll take this again. So these yellow zones are just showing you guys potential entry zones. That's the only reason I'm making them yellow. Okay, so we could see a rejection to 61.8. Ideally, well, let's put the MAs back on. Actually, let's do that first. So you want to go long once you see the break of a lower high, right? So we haven't seen a lower high yet. You know, I spent down here near this 61.8 fib level. The last higher lower high is up here. So ideally, we want to see some consolidation, right? So we can get a good entry. We want, oh, there it is. We want to see this. I want to see consolidation, right? And then break of a lower high, which is right here. Now we have an established lower high. What we want to see is a break above that lower high, retest, confirmed higher low, right there, and then you can enter on a bullish setup as this is confirming this higher low. And then we're going to target higher. Okay, so that's how you confirm that reversal off the 61.8. You just want to see that break of a lower high. If this does just pull back, you know, right now, and gives us like an engulfing or just a lot of volume back up to this 38.2 area, your stop loss is going to be huge now. So that's why you want to see consolidation, because you want to see a confirmed break of a lower high and then the formation of a higher low. And in this scenario, our last lower high is here. So to be conservative, we would have to wait for a break above this lower high and then a confirmed higher low, which then you would enter on and then target higher. But ideally, you want to see this consolidation first. This would be the better trade, and then a continuation to the upside. So that's a trade scenario that we could see happen right now. Or this one is a very good potential trade setup as well, where we get a deeper pullback to the 88.6 and recent broken structure right here. Okay, so this is fine too. You know, when we may even get a lower high in between this 61.8 and 88.6, and then a break of that, that's your entry. So let's go ahead and map it out again. So let's just clean up the chart a little bit here. Whoops. Why won't this erase? There we go. Okay, so let's say price action does something similar, where it it comes down, pulls back, gives us a lower high, double bottom. Then you want to enter on a confirmed break of a lower high. All right, confirmed break of a lower high, and then a confirmed continuation after you see a higher low, and then you're entering on a bullish setup. So that would be ideal. Again, this lower high could be, could form lower, and even further increasing your, risk to reward, because your stop loss would be, tighter, and your entry would be closer to it. So that'd be really good. Stop loss would be down here, below this higher low, right? Below this double top. A lot of confluence, a lot of areas protecting your stop loss. So this would be a really good trade. And then you target higher. All right, so we're actually not too far away from entry on this. This is the 4 hour again, so you kind of just got to wait, see how price action reacts. Maybe we'll reject the 61.8, maybe it'll continue to drop and then give us a reversal. So that's how we're going to play this one. We're bullish first, looking for long opportunities until we see pretty much a break of a higher time frame, higher low. So by that I mean this needs to happen. So the last higher low, or the next higher low rather, if we were to reverse, is right here, right? This is the last higher low before this rally. So technically, for us to consider short positions, price action needs to form a lower high below this zone here, and then you can go short, right? Because that's a transition. That's a higher time frame transition right here, where we're breaking these higher lows. Now, going to the downside, bearish pressure, bearish volume stepping in, giving us these lower highs. Then you could enter on, strong bearish setups. Interesting, very interesting. So, it could also range in here for a while too. So this would be the first step of a transition, is a break back below 96.5. You start getting lower highs below that zone, that's an indication that something big's happening, that we could be seeing a higher time frame, change of trend. So that'd be step one, and then the most conservative would be a lower high below this zone. Okay, because even in here, even if we consolidate in this little range right here, like this, even as long as we're bouncing in here, this is still technically bullish, because all of this in here is just a test of this higher low. Okay, so really, until this zone breaks, like that, it's still, the structure is still very much bullish. Okay, but yeah, we'll see. We'll see what happens. It's looking good right now. Definitely got a lot of bullish volume just sitting in here. We'll see if it has enough to break. All right, guys. So let's get a one look on the 1 hour. I mean, that's all we can do right now. We're not getting ready to execute, so we don't need to drop to the 1 hour or 30-minute. You really want to see the first stages of confirmation happening on the 4 hour before you drop down. But we'll just take a quick look at the 1 hour anyway, just to see how it's all looking. So yeah, good amount of bearish pressure, pushing lower. Recently broke structure right here. Right, recently broke right here. Let's round it up. Okay, and we could see, if this does pull back, you could see this pull back to there. How it's going to react to 61.8 after this pullback, we don't know. Maybe it'll blow through it. Maybe it'll form a double bottom, give us that reversal. But yeah, definitely a lot of bearish pressure on this time frame. Definitely looking to go find support at a lower level. So we'll see. All right, guys. So this has been a full chart breakdown on AUDJPY, and I'll see you guys in the next one.